Well, I suppose we're still in this, what they're now calling the new normal of decelerating growth. So I think that's something that's likely to continue over the coming 12 months. So we could even crack on a full year basis below that 7% number. I don't think it's too disastrous for China or for the global economy, but obviously it isn't good news, and it's clearly they're prioritising reform over the short-term economic outlook at the moment. So yeah, we remain bullish and overweight both the US, but also Europe and Japan on a currency hedge basis. And the key rationale for this is we still believe central bank policies are going to be very supportive. So in the US, we will see a Fed rate hike probably around the summer months, but we don't see that really getting in the way the economic acceleration we're seeing there. Whereas Japan and Europe are increasingly supportive of the economy through quantitative easing in Japan's case, and that's also likely to come through in Europe. So the key risks obviously to Europe and Japan are that the currencies may continue to weaken, so that's why we prefer them on an FX hedge basis. So within Asia, we're still overweight India, and we're overweight China now as well, as I say, on reduced risks. We also like Taiwan and Thailand. Thailand is actually quite an interesting story. Obviously, we saw a very weak investment and consumption environment. That's picking up quite nicely there. We've seen the market do pretty well already, but we still see longer term opportunities coming through in those two markets as well. I think we're not worried about the growth outlook. We're looking for a modest acceleration in global growth next year, led obviously by the US, but also Europe and Japan could see an acceleration. But oil prices have fallen significantly based on increased supply rather than reduced demand as such. So that's something to watch out for. I think it's one of the hardest calls when looking into 2015 to make. We're clearly, in the short term, we're not bullish on oil. But maybe the majority of the weakness has already happened. So probably short-term weakness and then maybe stability and a slight rise in the second half of next year is to be expected.